Intel stock. We need to do a deep dive in it. I was pretty confident in this stock dating back to 2019, 2020, and then all of a sudden these Q2 earnings came out and kind of changed things in my mind, and this is where I decided to go and do the deeper dive. So right now, I'm going to go through the 10K. I'm going to walk you through exactly what I look for. I'm going to go through the financials again just to make sure that everything is staying on par. I'm going to go look and see what they have projected going forward. Not only that, this CHIP Act is a big part of it. So am I relying too much on the government right here to get Intel going? AMD has taken some market share from them. I'm also going to go and look at bearish cases on it. I like going to Seeking Alpha and seeing what the opposing view of mine is and say, hey, are they being realistic about this? I'm going to go look at some news stories, and this is exactly how I go into a 10K, how I go into the deeper dive that you guys always ask for. So let's do it. So first thing I look at are the numbers, of course. Let's go and look at the income statement. Now, looking here at revenue, it was a very, very slow grower, which is fine for me. But again, we had that big drop. Now, it's not totally concerning because the rest of the industry, if we go and look at an AMD, so they had significant growth, but they are still in a growth phase. Let's go and look at Micron. Micron income statement. They're still growing. So these concerns are weighing on me. I'm looking at them and saying, okay, what is the deal here? Now, the difference is Intel makes more than all of these other companies. Intel makes more than NVIDIA and AMD combined. So with that being said, remember, they're not in the same phase that those other big growth companies are in. But this number is definitely concerning to me. Net income. Just another quick high-level look. Increasing. Big increase in 2019. What happened there? I know they've done some acquisitions. They're doing a lot of acquisitions going into this Mobileye thing for these self-driving cars. They're still generating a good income compared to what they were before. So I'm happy with that. Shares outstanding is something that I've been very happy with, the way that they're allocating capital. They're buying back shares with the stock price being cheap. They're also still paying a dividend. Let's go look at their dividend real quick. And the dividend being paid out is, so this free cash flow number, minus 1.58 billion. Not going to totally look at that and say, oh my God, they can't afford their dividend. Because if I look at the 5-year average, it's about 12.5 billion. They can comfortably afford this. This was maybe some type of fluke year. Maybe it wasn't. But let's see. They have a lot of spending going forward. Let's get into the 10K here. So guys, this is what I do. I start at the top and I just start scrolling. And I look for a lot of different things going on in here. A year in review. Total revenue of $79 billion was up year over year. We experienced strength in notebook demand and recovering desktop demand. Now, this is something that we need to talk about here. This desktop demand that is going on. There was a story that I read on the morning show that between 2011 and 2019, it was almost stagnant growth for desktop computers. And it wasn't until everybody was forced to stay at home that we saw this big skyrocket in people buying computers again and growth in that industry. So with that being said, do I look at this big increase that I saw in revenue and profits and say, okay, this is probably where our new baseline is? Or do I say, well, this is some type of anomaly situation and it's going to come back to the current baseline? That's something that I need to think about. But again, that goes industry wide. So revenue down here, and this is 2021. They haven't released their full annual 10K. So the 10Q, you can go over here and look at the 10Q, which is going to give you everything compared. Second quarter, GAAP revenue, $15.3 billion, down 22% year over year. This is the concerning thing that I was looking for. Gross margin. The gross margin that they came in at was 36.5%. That was down from, I think it was about 56%. Something like that. That was one of the major concerns. But when I looked into it, Intel didn't raise prices, which didn't make sense to me. They weren't keeping up with inflation. All of these other companies were increasing their prices and Intel didn't. So I do think they could probably get back to that 54, 55, 56% range. But it was very confusing why they just willingly took a big hit on their gross margin. Let's go over here back to the 10K and go and see some more highlights that I made. They are investing in themselves big time. There was another story that came out today. This was from the Wall Street Journal. Intel signs a $30 billion funding partnership with Brookfield to finance chip factory expansion. They are trying to expand in every way possible. They're building a $20 billion factory here in Ohio. They're building a factory in Rio Rancho, New Mexico. They're going to build something in Malaysia. the total of those two together is $10.5 billion. So I also look at this and say, are they spending beyond their means? Paul Gelsinger, the CEO, has said, we're in an interesting situation and we are going to try to innovate and spend ourselves. He didn't really say this in these words, but it almost seems like they're going to spend themselves into prosperity. They've talked about making more acquisitions. So these types of things are making me a little bit concerned. Second allocation priority is investments and acquisitions of companies that help with our strategic investments. Namely, they're doing it with these Move It to get this Mobileye going for these not self-driving cars, but the software to create self-driving cars. Okay, so the next thing I find here, the revenue growth. So they've talked about this. We've delivered our sixth consecutive revenue growth with $40.5 billion as the PC continues to be more essential. And they're talking about specifically their PC space right here. Did they get to a point where they had this growth for the last 6 years? Growth, explosion of growth for COVID. And now are they going to come back down to this level? That's what I worry about. I am concerned because they are getting market share taken away from them. You've had Apple get rid of the Intel chips. Granted, it was only 1% of revenue, so it's not a very, very large piece, but the optics of that are not very good. And that is a big reason. Before we made a video and saying that it was 1% of revenue, I thought that it was a massive, massive spike in revenue. Here's their computing space, $34 billion to $40 billion, $40.5 billion. We operate in competitive markets. Here they're talking about their competition. AMD, Qualcomm. I need to go and look at Qualcomm. Increasing competition with Apple. They were just continuing to make their own chips, and they've gotten rid of the chips coming from Intel. NVIDIA, they've mentioned. But this is what I look for. And these highlights that I pull out, these are obviously the things that I focus on. Mobileye. This is a big thing. They're talking about doing some type of spin-off with Mobileye. It's a global leader in driving assistance with self-driving solutions. So how much of this, their Mobileye volume grew 42%, and they expect it to just continue to grow and grow. How realistic is this? You have competition coming from Tesla. You have competition coming from all of these EV companies, Lucid. Apple's definitely going to get in the mix. So how realistic is this Mobileye thing? If I'm them, I'm almost trying to take this Mobileye and put it in as many cars as I can before those other companies try to get things going. Look at their 5-year trends of revenue. It is increasing. $200 million in 2017, $1.4 billion in 2021. So it's definitely going up. So they have been engaging in public transportation. They're doing this Move It robo-taxis. That's something that else they're doing. So it's not necessarily that they're getting into the consumer car space. The next thing I want to get to is probably risk factors. And when I talk about risk factors, there are a lot of risk factors in there that are just absolutely asinine. I mean, one thing, I'll give you an example. You know what's a ridiculous risk factor? Looking and saying with the Facebook situation, if Facebook loses all of Europe, all of their European users of Instagram, Facebook, WhatsApp, that is a risk factor. Of course it's a risk factor. Is it probable? No. Is it even in the realm of possibility? Most likely not. But that is the type of stuff that you're going to find in the risk factors section. So the first couple are what I like to look at. Due to significant complexity of manufacturing operations, we may have to incur significant charges and costs. This is a very, very capital intensive area. And Intel is taking it to a whole new level with everything that they're doing. So this is definitely a risk that you need to pay attention to. Supply chain issues. These are on another level right now. And it doesn't just come from the getting chips processed. It comes from when they start making these factories, they are going to have a lot of chips work on the machines that are building the factories, that are making the machines to make the chips, et cetera. So this is just a vicious cycle. And that is a lot of what we're seeing in the world right now. So these could be very, very significant supply chain risks. Now, the good news is they're not the only ones facing it, obviously. It's pretty much entire sector-wide. We face risks of cybersecurity, another thing that you need to think about in the tech space. So revenue, when we're looking at the computing area, again, big decrease. In client computing from 2021. I don't like to see that. Total revenue from their data centers, decrease. Don't like to see that. Let's get down to the other, this is the kind of miscellaneous area where we talk about the Mobileye, the other investments, decrease here. So all of these different revenues being decreased is absolutely a concern. Now that I have a pretty good idea of where the numbers are, so let's summarize this. Do I see growth in what their plans are going into the future? Yes, I do. Do they have to execute it perfectly? with the way that they're spending and the situation that they're in with market share being taken away from them? Yes, they do. Now, I will say this about the market share section. You don't need to be number one for me to invest in you. I really don't like this argument that people make. AMD is the best out there. Okay, that's fine. NVIDIA is better than that. Okay, that sounds good. Micron's better than them. Okay, Intel's better. Intel's the worst one. Well, that might be the case, but there's still something to be said for this one. There's still something to be said for Micron. There's still something to be said for NVIDIA. And of course, there's still something to be said if AMD is the best on the market. I'm not looking for companies that are the best in the world at what they do. Is it a bonus? Sure. But I don't have to say it's either going to be Google or Apple for me. They're the top two companies in the world, in my opinion, right now. I don't need to pick one of them. They're kind of in the same space, kind of not really in the same space, but I don't need to pick the champion every single time. That's the great part about investing. You don't need to pick the World Series winner every time. So let's go into some bearish cases. I love the title of this one. A balance sheet that only a mother could love. So let's go through and see some things that I highlighted. Intel continues to lose critical market share to AMD, most notable in the overall x86 segment by 8.9 percentage points year over year. Despite robust growth and demand in the cloud market, Intel's performance remains disappointing thus far. And namely, he puts out other companies like Microsoft, Google, and Amazon. Of course, Amazon being the world leader in that right now with Amazon Web Services. Intel reported notable net losses in the first quarter of 2022 for the first time since 2017. The situation was further worsened by negative free cash flow, and that, of course, is because they're insane spending that they're doing on their foundries. And here's the thing. Gelsinger has said this. They're expecting returns by 2025. So the question becomes, is it realistic? So his consensus, analysts put a price target of about $40 on this thing. His price target is somewhere in the low 20s. We need to think about this benefit from the CHIP Act. This is the CHIP Act that came from the government. Analysts expect them to get $15 billion of assistance. That's fine. But let's say that the price is $25 a share. That's the price that you have to pay today. If I'm relying completely on the government and a CHIP Act, that to me is a very scary place to be in. So I don't like companies that put this much reliance on one specific thing, especially when it's government involved. Okay, value trap implies 27% more downside. I calculate that Intel's fair value today is $26.94 a share and could see 30% more downside. This guy says that he thinks that the numbers that were coming out in the last quarter are more reasonable than they have been in the past. Investors should consider the company has underperformed for years, despite a boom in the semiconductor sector. I haven't thought about that. He is absolutely right. But at the same point, this is a mature company. How much growth can they possibly have? From 2018 to 2021, Intel's revenues have only grown at about a nominal GDP growth, $70.8 billion to $74.7 billion. Look at companies like Micron, AMD, and NVIDIA, and they've absolutely exploded. Government support, that does worry me. Secondly, Intel generates 90% revenue from PCs and servers segment. I like that they have opportunities to expand into the cloud space and the other spaces. So that does actually give me some type of relief. In my opinion, any estimate beyond 2025 is too speculative. I do agree with that. But 2 to 3 years from now is quite precise. Terminal growth rate, this guy applies 0%. We'll put in a stock analyzer tool when we're done. And he comes up with that value of about $27 a share. Now, the Intel CEO, he says they're at the bottom. They missed earnings and everything, as we saw. But he thinks that they are going to start recovering from here. He said that they're going to start seeing fully adjusted revenue, $65 to $68 billion going into next year. They're going to get their margins back up to 50-something percent, 54%, I believe it was. Maybe it wasn't in the story. I'm doing it off the top of my head. Here we go. 51 to 53%. So I just said a lot of stuff. Where does this put me? It puts me in a space where I say, okay, I still like my Intel investment. Am I curving the percentage that I want to get into the company? Do I think that this company truly does let's go to stock analyzer tool real fast. And let's put in some numbers. I'm going to do one number. I'm going to put in 0% revenue growth for the next decade. Profit margin, I will do 24%. Free cash flow margin, I will do 16%. PE, I'll put in 15. Price to free cash flow, I'll do 15. And my percent return, I'll do 12.5. And I come in here somewhere in this basically $30 to $43, $44 range. This is with 0% revenue growth. So if this company continues to do what they're doing, and doesn't change anything. Now, things will change because they're spending so much. I'm fairly comfortable around where I'm at with my price, with my cost basis somewhere around the $39 range. Now, if all of this falls apart and they just keep spending into oblivion, this will end up being a bad investment. But on the other side, if we look at it and say this CHIP Act works out, that's going to be a good thing. If we look at it and say all of these factories work out, that's going to be a good thing. If supply chain issues lighten up, that's going to be a good thing. So the question to you as the investor becomes, how practical are these things? Was the author of that last story that said anything beyond 2025 is completely speculative? To me, there are a lot of speculations that I'm making here. I'm looking and saying, yes, no one knows what this CHIP Act is going to do. Are they going to get that $15 billion? Is it guaranteed? I have no idea. Can the contract change? I have no idea. Will this Mobileye thing work out? The spinoff that they're doing, is it going to be a true revenue driver, or is that going to dry up? Where are computers going to go in the future? Desktop computers. Is the boom over? Is it going to contract again and go back to the 2011 levels? So these are a lot of questions that you need to ask, but this is an example of how I get into a deep dive. For me, this is still an investment that I'm going to stick with. The question now becomes over the next couple of days, do I want to make this 1% of my portfolio, 3% of my portfolio? That's kind of where I'm at with this thing. So in the end, go and look at this video that we did on margin of safety. This is a video that Paul did. This is where you can decide where you're going to put yourself and how risky this investment is going to be. How much cushion are you going to put in there? Go watch that video right now. I'll catch you on the flippity flop.